FinanceStrategy.com.
Hi, this is Chris again, looking at the upcoming trading session Tuesday, October 7th, and as usual, I have the economic calendar out in front of you, and really, there's only a couple things I'm paying attention to. There is the BOJ press conference. I don't expect it to move the markets too much, but having said that, I will also be the first to say that it's very likely that they will try to work against the value of the yen and, of course, lift the Nikkei. So both of those things may happen. But in general, probably not a major market-moving event. The British released manufacturing production month over month, anticipated to be at 0.1%. The better that number comes out, the better it'll be for both the pound and the FTSE as far as I can see. And the FTSE is bouncing, so it's possible that it may kind of coincide. Later in the day, if you look at the economic numbers, you can see that they do give it a little bit of weight for FOMC members speaking. They can always say something that kind of shocks the markets, but really, 2 days after non-farm payroll, I just don't see that happening. With that, let's take a look at some charts. S&P 500, as you can see, trying to rally during the course of the day on Monday, but just found quite a bit of noise at the 1980 level like we had anticipated, and as a result, we turned right back around and formed a shooting star. That, of course, is a pretty negative sign. So we think we'll probably drift down. We're not really interested, I should say, in buying puts. What we'd rather see is seeing some type of pullback that shows signs of support, and then buying calls, because we still have an uptrend line that's below. It's obvious there, so a little bit early to start thinking negative. A move above 1980 would also offer call buying opportunities. Looking at the euro dollar, you can see that we did, of course, bounce on Monday, 125 being a round number. It's not a big surprise, really. That being the case, it looks like the market is ready to perhaps do a little bit of correcting, if you will, after this massive sell-off. We actually think 129 will be an area that there should be a significant amount of resistance at. So what we're looking for is a bounce here and a resistive candle in order to start buying puts yet again. In front of you is the silver market, but unlike the other charts, this is not the daily one, this is the hourly one. We think that sometime during the later part of the session on Monday, we will probably start to see some selling pressure re-enter the marketplace right around the 1720 area. So we're looking for a little bit of a move back down, and at that point in time, we were willing to buy puts because, without a doubt, this market is negative. Back on the daily chart, you can see that we've bounced nicely, but this would make sense as we continue to just kind of grind around in this area before hopefully building up enough pressure to make the puts really take off in our favor. That being the case, though, we have no interest in buying calls until we get above 18, something that we don't anticipate seeing anytime soon. And finally, the DAX, you can see that the market broke higher initially during the session on Monday, but then found sellers again. This tells us the market's probably going to go down to 9,000, and with that, we actually like the idea of selling or buying puts every time the market rallies on the short-term charts, at least till we get down there. Down there, a supportive candle, especially on the daily time frame, for example, would be an excellent buying opportunity for calls as far as we can see. But in the meantime, we do expect bearishness. And with that, we have looked at the upcoming October 7th trading session.